Recently, all of the talk in the news has been related to the tariff charges that President Donald Trump is said to be putting in place on Canada, Mexico, and China. So we're going to be looking at what that might mean for Canada, the US, Mexico, all the countries that are going to be involved in this. Is there going to be a trade war coming? So we'll dive into some of this information in this video here today. So what we know about the tariff charges as of right now: they were originally set to take effect on February 4th, but they've now been delayed 30 days, which was stated a couple days ago. There's a 25% charge on goods imported from Canada and Mexico, and then there is a 10% charge on Canadian energy products and Chinese goods. 10% charge on Canadian energy products. I'll dive into that in a little bit here. Canada and Mexico have both placed retaliatory tariff charges. The Chinese Ministry of Commerce has said they will file a lawsuit to the WTO and take necessary countermeasures to firmly safeguard its rights and interests. And then we also know that US companies would be paying the charge on what they import. Now, I have a star beside that because that is what is said to be happening, but I have a feeling that it's going to find its way back into consumers having to pay, whether that's through taxes or inevitably it's going to be prices are going to go up for consumer goods, and then everything is going to end up being more expensive. So some of the effects that it would have on Canada and the US: over half of Canada's small businesses are involved in importing or exporting goods directly to the US, so that sits at 51%. And if these small businesses do have to pay this 25% charge, that would absolutely destroy small businesses, and who knows, they might end up just going out of business very, very quickly. Canada buys more goods from the US than China, Japan, France, and the UK combined, and the US sells more goods to Canada than any other country. So Canada already buying more goods from the US than other countries. If there is this 25% charge on it, everything is going to go up in price, and that's going to lead to consumer spending going through the roof, which is something that we do not want, seeing as inflation has already driven up the prices on everything. On a daily basis, $3.6 billion worth in goods and services cross between Canada and the US, making for a $1.3 trillion annual relationship. So tons of goods going back and forth, and then once again, if there is this 25% charge put in place, everything is just going to go up in price. A 25% tariff charge could shrink Canada's GDP by 2.6%, and Canada's GDP is currently sitting at $2.14 trillion. If it does end up going down, that's going to be a massive hit to Canada's GDP, and in turn, a 25% tariff charge on the US from Canada and Mexico could cause the GDP of the US to drop around $200 billion, and their current GDP is sitting at $27.36 trillion. Again, some more effects. Many goods cross the border multiple times before they become the final product. Tariffs will raise the cost of production and increase prices for a wide range of goods traded between Canada and the US. So many goods, mostly in the automotive industry, parts are going to be passing the border from Canada to the US many times before it actually reaches the final product. So I'm not sure if that is going to be a one-time charge or if that is going to be every single time these goods cross the border that there's going to be a 25% charge put in place on those products. The impact will be different for certain sectors depending on their reliance to the US and the Canadian market. Higher dependence most likely means they will experience more severe disruptions. Industries such as agriculture, manufacturing, and energy will experience varying degrees of impact. Energy products and motor vehicles, which represent Canada's largest exports to the US, they are expected to be among the most adversely affected. And then this list here, this is a list of the top 10 imports from Canada to the US. So first one on the list is oil and petroleum products at $108.3 billion. So I see why that Trump said it's only going to be a 10% tariff charge on oil products, because it is such a massive import to the US from Canada. So having a 25% charge on the number one import from Canada, it just doesn't make sense. So I see why he said 10%, but personally just don't think it's a good idea. But hey, I'm just some guy on YouTube trying to figure this stuff out and pass this information on to you. And then, as I mentioned before, the automotive industry, Number 2 and 3, cars and trucks, and then auto parts. Cars and trucks is currently sitting at $42.8 billion, and then auto parts is at $14.1 billion. Again, if companies are having to pay this 25% charge on automotive products, and those are the number 2 and number 3 imports from Canada to the US, there's going to be a lot of extra money spent on importing these products. And then some more effects that I got from The Guardian. This statement is from Marcus Noland. He is the Executive Vice President of the Peterson Institute for International Economics. He says, the impact of these imposing tariffs will have the effect of depressing U.S. economic growth, contributing to a higher rate of inflation, and those effects will be worse if any other countries retaliate in any kind. So we've already seen Canada and Mexico state that they are going to implement a retaliatory tariff charge. So if that's what we know already, then it's going to have a massive impact on not only the US economy, but Canada's and Mexico's as well. And then another worrisome downside to the tariffs are, as banks see inflation rising due to higher consumer prices, interest rates will increase and lead to a weak economy, potentially leading to a single rate cut this year by the Federal Reserve. And we already saw that the rate cut announcement wasn't going to do any cuts. Who knows? If there might not be any rate cuts coming at all this year. So we kind of just have to sit tight and see what happens. Yeah, as of right now, there's so much that could happen within the next 30 days to try and get these tariffs not put in place. Hopefully it doesn't happen. I don't see there being any benefits to any of the countries involved in this. Now, President Trump has said that it will be good in the long term, but in the short term, it could absolutely destroy a lot of industries, and it could completely disrupt the stock market as we know it. So as of right now, we just kind of have to sit tight, see what happens. Hopefully they can reach an agreement and not have these extra charges put in place. I'm sure much more information is going to come out in the next coming days and weeks before this 30-day postponement runs out. So I'll be on the lookout, trying to find more information as much as I can in regards to this situation. We'll see what happens, but that's going to wrap up today's video. I just wanted to keep this one pretty short and keep the information precise. Hopefully this helps you guys out in the understanding what these tariff charges could mean for consumers. Thank you for tuning in. If you gained any information from this video, please give it a like, please subscribe to the channel, and we will see you in the next video.